Let's answer our practice set 2 for the module 4. So you need to open the accounts for cash, equipment, notes payable, sale capital, service income, and rent expense. Then you analyze and post the transaction in the T accounts. Then you make a summary of balances for the results of operation, nominal accounts, and the financial position. So let's have transaction number 1. Giselle decided to put up a consultancy firm and invested cash for 1,500,000. So what is the value received by the business? Cash. So what will be the effect on the accounting elements? There is an increase in cash since the value received is cash. So therefore, there is an increase in assets. When you increase the assets, you debit since cash is being received. Debit cash for 1,500,000. So the value parted with is right of ownership. Therefore, the effect of the transaction on the accounting elements, there is an increase in equity. So if there is an increase in equity, you credit. You credit Giselle capital of 1.5 million pesos. Next, rendered services to the Suerte company, 75,000. So the value received by the business is, since cash is being paid by La Suerte to the business, so the value received by the business is cash, and the effect on the of the transaction on the accounting elements, there is an increase in cash. So you debit cash to increase the cash, and you credit what? Since the value given up is services rendered, so the effect of that, there is an increase in income or revenue account. Therefore, you credit service income for 75,000 pesos. Transaction number 3, both equipment from Mills, 120,000, issuing note for the account. What is the value received? The value received by the business is equipment. So what will be the effect on the transaction? What will be the effect on the elements or account? There is an increase in assets. If you increase the assets, you debit equipment because we're talking about it says that the business bought equipment, therefore you debit equipment for 120,000. What is the value given up? The value given up by the business, it says that the business issued note, therefore there is debt or obligation to pay. If there is debt, the effect of transaction and the accounting element, there is an increase in liability. So, if you increase the liability, you credit notes payable. So, notes payable credited for 120,000. Next, transaction number 4, paid rent for the month, 26,000. So, the value received is the right to use the property, but it says that you only pay for a month. Therefore, there is no advance payment. So, you increase the expense account. If you increase the expense account, you debit rent expense because you pay for the rent. Therefore, you debit rent expense to increase the expense accounts of 26,000. So that is transaction number 4. So the value given up, since you pay for the rent, therefore cash is the value given up. Cash is being used for payment. So what is the effect? There is a decrease in cash. To decrease cash, you need to credit cash for 26,000. Transaction number 5, made additional investment of 320,000 in the business. So what is the value received by the business? Since the owner contribute additional cash. So meaning cash is being received or value received by the business is cash. So the effect of the transaction in the elements is you increase the cash. So, if you increase the asset, so you debit cash account. So, meaning, debit cash to increase your assets. So, 320,000 is debited. And the value given up is right of ownership. The effect of this, there is an increase in equity. Therefore, if you increase the equity, you credit the equity account with 320,000 pesos. And after that, get the total of each account. So, get the total of all debit and credit. So, let's have the cash. 1.5 million plus 75,000 plus 320,000. So we have 1,895,000. The total credits sa cash is 26,000. Get the difference. Debit minus credit. So the balance for cash is 1,869,000. For the equipment, the balance is 120,000. For for notes payable, the balance is 120,000. For the capital account, the balance is, you add 1.5 million plus 320,000. So we have 1,820,000. So the balance for the service income, 75,000. For the expense is 26,000. Take note that the normal balance for cash is debit, for equipment, debit, for notes payable, credit. Normal balance for the equity is credit. For income, normal balance is credit. For expense, normal balance is debit. Then, get the compute for the profit for the period. For service income, the balance based on the T accounts. So, 75,000 minus the rent expense of 26,000. So, our profit for the period, 75 minus 26,000. 75. 49,000 pesos. For the cash, balance for the cash, 1,869,000. For equipment, 120,000. So the total assets for the period is 1,989,000. For the notes payable, okay, normal balance is credit, so 120,000, just copy the amount of 120,000. For the equity, we have existing balance of 1,820,000 plus the income for the period or profit for the period of 49,000. Therefore, we have 1,869,000 is the amount of capital of Giselle. Then you add the notes payable of 120,000. Therefore, we have total liabilities and equity for 1,989,000. Okay, so profit for the period is 49,000. Total assets is 1,989,000, which is equal to the total liabilities and owner's equity. So take note of this class. Total assets should be equal with total liabilities and owner's equity.